Why can I sell my house with the mortgage rate attached? When selling a house with a mortgage, the buyer needs to assume the mortgage. However, variable rate mortgages and home equity lines of credit can't be assumed. The new buyer must gain lender approval, including meeting credit requirements. Selling a house with an attached mortgage involves a process known as mortgage assumption. This allows the buyer to take over the existing mortgage, benefiting from its terms. However, not all mortgages can be easily transferred. Mortgages with variable rates or home equity lines of credit can't be assumed. For those that can, the new buyer must undergo approval by the lender. Lender approval involves assessing the buyer's creditworthiness and financial stability. Meeting certain criteria, such as a satisfactory credit rating, is essential for the buyer to assume the mortgage successfully. Additionally, the mortgage assumption process may incur some fees, which vary depending on the lender and specific circumstances. Can I move if I have a fixed-rate mortgage? Yes, you can move if you have a fixed-rate mortgage, but there are considerations. Fixed-rate mortgages typically have a predetermined period during which the interest rate is locked in. If you move before this fixed period concludes, you may face prepayment penalties and fees. To avoid these fees, you have the option to port your mortgage to a new home. Porting allows you to transfer your existing mortgage to another property without incurring additional costs. However, it's essential to check with your lender and understand the specific terms and conditions of porting to ensure a smooth transition. Can a mortgage broker lock in a rate? Yes, a mortgage broker can lock in an interest rate. This typically occurs when the lender issues a loan estimate, and the interest rate is specified on page 1 of the estimate. However, it's important to note that this rate lock is not indefinite. If any changes occur to your initial application before the closing, the locked interest rate could be subject to change. Mortgage brokers and lenders may have specific policies regarding rate locks, so it's advisable to review the terms carefully and seek clarification if needed. What happens at the end of the mortgage term? At the end of a mortgage term, the homeowner faces several options. The outstanding balance on the mortgage becomes due immediately, requiring a decision on how to proceed. The three primary choices are selling the property, remortgaging, or potentially facing possession action in the courts. Selling the property allows the homeowner to use the sale proceeds to pay off the remaining mortgage balance. Remortgaging involves securing a new mortgage to replace the existing one, providing an opportunity to renegotiate terms or access different loan features. However, eligibility for remortgaging depends on various factors, including the homeowner's financial situation and the property's current value. If neither selling nor remortgaging is feasible, the homeowner may face possession action initiated by the lender. This legal process can lead to the forced sale of the property to recover the outstanding mortgage debt.